Jessica. Where do you live, Jessica?
In Australia. In Australia.
Where in Australia?
Perth.
Okay, but you're from here, Kuala Lumpur?
Yeah.
Okay. How old are you going to be on your next birthday?
42.
42, okay. And tell me a little bit about what you do for work.
We own a photography studio in Perth.
Photographic studio, okay. How long have you been doing that?
Well, helping my husband business nearly 15 years.
Okay, so very entrepreneurial.
Yeah, in a way.
How do you typically spend your time and your money?
Well, I'm hardly in Perth now because of the lifestyle that I choose. So I'm pretty much in Perth when during school term. I'm out of Perth during school holiday. So the lifestyle that I have is I'm aim to travel 4 times a year. I would say slightly above average compared to local. Yeah, because my daughter go to private school, and also we spend a little bit of money off after school activity, which is the local. Not everyone would do it, so we spending slightly above average of normal household in Perth. Yeah.
Okay. For that lifestyle, do you know how much roughly you spend each year?
Each year, around 150 to 200 on the conservative way of thinking.
Yep.
Yeah.
We're talking Australian dollars.
Yes.
So
or
150
Australian
to 200K.
Yeah, inclusive of traveling. Yeah.
Insurances.
Yes.
Food, those holidays, everything.
Yes.
I'll throw this out there. What does retirement mean to you?
That I don't need to work, and then annually can still remain my lifestyle, which is around 150 to 200K income passively.
Okay, so for your retirement scenario that we calculate now, would you like to consider spending more money or spending less or keeping it about the same?
Keep it about the same. I would say once my daughter goes to high school, maybe a little bit more, maybe 10% or 20% more, but I won't see massively jump. Yeah.
Should we work with 175,000?
Yeah.
Do you want to stop working now, next year, or are you happy to work until 68?
Time, maybe in 10 years' time.
Okay, so you'll be around 52?
Yeah.
That would be your ideal.
Yeah.
Living in Australia, do you pay into a pension?
Well, because of superannuation, we do contribute, but we don't heavily put in there because being an entrepreneur, we prefer put our money into the investment house, which is that my belief.
But is there a minimum then that you have to put in?
Yeah, so I think it's around up to 11% now of your wages.
As you're aiming at 52, I would say let's just leave that out because you wouldn't be able to access it anyway, right?
Yeah.
What about private pension or company pension?
No, I don't have.
So you never opted to pay anything in?
No.
Okay. How many properties?
At the moment, 6.
So I'll just bunch them all together?
Yeah, bunch them to get total figure. Yeah.
6 properties. What's the current value of these properties? Your equity value.
Equity value.
Not the price of the property, but how much of them you own?
I own, what's the calculation just now? I think 3.7 million Australian dollar.
Okay. All right. So for the property, 3.7 million. That's the capital that you own and what you would have after selling everything at today's rates and paying any tax on the profit, right? And the sales fee.
And sales fees, yeah.
Excellent. And how much do we expect that to increase by annually moving forward? I know it's quite a hot market right now.
Hot market in Perth at the moment. On the conservative figure, I would say 5% per year.
Yeah.
Yeah, on the conservative side.
So number 2 investment.
I got, not really investment, I got a lot of cash.
Cash, yeah.
Yeah.
This cash?
Yeah. And talking about in Australia.
Aussie dollars.
Aussie dollar, I think $500,000.
$500,000, okay. And I always have to take out any emergency fund, or if you have set cash aside for something that you think you're going to spend, like a special purchase beyond your normal expenditure. Do you still have $500,000, or do we have to take out from that?
Don't need to take out yet.
So we could say that $500,000 could be invested.
Yes.
Okay.
Yeah.
But what do you do with it right now? Is it just sat in the bank account?
Yeah, it's a term deposit.
As a
term deposit.
Term deposit?
Yeah.
Do you know what interest rate you get?
I think it's at the moment it's around 3.5 or close to 4.
That's decent.
Yeah.
Is it still liquid, or do you have to wait like 1 year
Or it can be liquid because we can break it off.
Okay, what's your number 3 investment?
Crypto.
Okay.
Haven't really looked into it. I would say 200K.
Mm-hmm.
It's on the safe side, yeah.
Do you have an expectation for how that might increase?
Of course, $1 million. $1 million, hopefully.
I think it's very hard for people to predict crypto, right?
Of
because
course,
it's so
yeah,
volatile,
it's so
up
fast.
and down.
Yeah, up and down.
It could, for the next 10 years, 5 years, be 45%, but I'd go more conservative with 25.
25%. Okay.
Yeah.
Let's go with that.
Okay. So for your annual contributions, we have 0. Okay. So we're just compounding capital over time.
Yeah.
Okay. Excellent. So Jessica, one thing we want to figure out is if you were to sell any of these investments, roughly how much would you pay in tax? Now, I know for your property calculation, we already included that, right? You worked out what the tax bill would be.
Yep.
Do you know what you might have to pay if you sold crypto, for example? Is that tax-free?
No, it's not tax-free. No.
Even if you held it for over 1 year?
No. Still taxable income.
Like an income or capital gains?
If it's more than a year, it could be a capital gain. Depends how we apply it.
Okay.
Yeah.
Probably you've been sitting on it for longer than a year.
Yeah, longer than a year.
Okay.
So it's a capital gain.
Do you know what the capital gains percentage is?
I would say it depends on the personal taxable income. So it's still, I would say average is about 30%.
You, on your tax lever, is very, very low. Blended weighted tax that you have to pay is 1.36%. Okay. But that's because we already assumed the property tax included. Okay. That's easy. So we go back to your nest egg tool. You can see how the nest egg is building up, right? You're 42. We have 175,000 of expenses that we want to cover. We don't expect to receive any further annual income. That would be a pension in most cases, right? Coming in, or any lump sum payout. Okay. We said the pensions were minimal. We're not really including them. Then we include our tax rate. I'm gonna put like 2%. Okay.
Why 2?
Because that was a blended weighted tax. Because we already include tax in your property calculation. Had we not, we would just add it in here more tax. Okay. And you would have had then more capital in your property. It would have been over 4 million and not the 3 point. What do we have?
3.3, 3.7.
3.7, okay. So that means you need to withdraw 178,000 to pay for your lifestyle, the 175,000 to get that net. The tax is very minimal. Okay. And we're gonna see how hard is your money actually working for you right now. 5.74%.
Which is good or bad?
It's quite low. If you invested in the stock market, index funds on average, like what sort of return you would expect?
I would say under 10.
It is about 10.
It's about 10, right? Yeah.
Yeah, for the last 90 years. Last few years have been a lot higher, 20%. That's not realistic to keep up, of course. With crypto, you had 25%, but your allocation to crypto is only... your allocation to crypto is 5%. You've got 84% in property, 11% in cash. Cash is not earning much either, 3.5%.
3.5, yeah.
Right? So it will be interesting to see now how this compounds to reach that goal of retiring at 52. I'm going to assume your nest egg is invested how it is invested right now. I have to jump from 5 or 6%. I'll put 6%. Okay, so that's like saying all of my money is going to be earning me 6%, even when I'm retiring and withdrawing from it. Okay, that means the nest egg needs to be 2.9 million. Okay, we're saying I want to retire at the age of 52. Now that means I think you're very healthy. You're going to live to 100, right? At least. We just have to plan for 100 as a default.
Yeah.
It's safe because then we can say I need the nest egg to last 48 years without running out due to two things. First, inflation, and later volatility. First, we're going to deal with inflation. And what this app will show us is if you are withdrawing 170
per month, per year,
178,000 per year
Yep.
from your nest egg, whilst the nest egg is growing at 6%, it will run out by age 75 or whatever. So we keep adjusting your nest egg until it doesn't run out by age 100. The right nest egg is about 4.28. That took care of inflation. Okay. And you can also play with inflation, by the way. Don't have to leave it at 2.5. We could say 3% if you wanted to be even more conservative, because the 3% eats away at your nest egg faster. Okay. The next thing we have to care about is volatility, right? Volatility means what happens if your investments go down. So the property market sinks for a period of a few years. Now it's gone down 10%, another 10%, okay? But you still need to withdraw from that. Well, by doing so, it makes it harder for the nest egg to recover and come back to where it was. And in the meantime, you lost the 6% gain you were supposed to get every year.
Yep.
Right? So that can destroy, again, how long your nest egg can last. And has nothing to do with inflation. Right, so what we do to safeguard against that is a cash buffer. Typically, that has been balanced by the 70-30 bond stock portfolio. That's why you had bonds, because it made it so everything can't go down too much. What if you haven't invested in stocks and bonds? Right? You may have invested your nest egg in other things, which you have. You've got crypto, you've got property. So we can't account for volatility in that way. So you have to add a buffer. There's a few questions that you can answer that decide how much buffer. And it's number of years of expenses. And it should range from 6 to the highest. So it's quite a nice buffer.
Yeah.
And then 2 would be the minimum if you can do certain things. Shall I run you through the questions?
You run through. Yeah.
Okay. This is suggesting you should have a 3-year buffer at least with that mindset, okay? So that brings us to 4.8 million. And you can achieve 4.8 by the age of 47.
Okay.
So actually, you're ahead of schedule by 5 years.
By 5 years.
With your current allocation.
Yeah.
As long as, even though the CAGR, the growth rate is quite low, 5.74%, it's helped a bit by your tax rate being very low. But if you can just maintain that, you'll be okay by 47. To spend that 175,000
per year. Yeah.
Yeah. What do you think?
Yeah. Happy.
So you only got 5 more years, and you don't need to make any changes.
No.
To your current, that's your current trajectory.
Yeah. It got me thinking because I never thought of it. I know that because maybe it's just in the luxury of the property price keep going up. I know that I can pretty much, worst to worst, if it's a rainy day, I still can sell one of them. Yeah. It can sustain me for another 5 years.
Definitely. And can I ask, why have you been so focused on property? You, besides the bit of crypto there, you don't have any alternative assets? Fairly traditional approach?
Yeah. I think it's just maybe I was focusing too much on the business for the past 10 years. And then maybe the goal was initially is to make enough money to pay off the mortgage, then no stress. Yeah. Because I think the model that I'm running is I don't want the stress for income.
Do you think one thing that could potentially stress you in future is that knowing you have such a high concentration in property that is in the same area, and I believe the same type of property, maybe that's a bit of a risk there that you could diversify. Maybe corporate bonds issued by companies that you know and trust.
Could be, yeah.
You like property, maybe an easy way to get into other types of property is REITs, real estate investment trusts.
Could be, but I'm more into I'm more looking on the commercial warehousing. Yeah. That's what we're next.
You can find REITs for that.
Yeah.
Okay, no need to take any unnecessary risks.
No.
Oh, very good.
The lifestyle is just want to go travel. If we can still walking, we should go travel.
Yeah. Well, you can.
Well, we can. Yeah.
Okay, Jessica, thank you very much.
Thank you.
Good work.
Thank you.